Alright, good morning guys, it's Jason Greystone from Trading Powered. I just wanted to run through with you what we were looking at on the pound yen during the London live room yesterday. I want to go down through the top-down analysis just to show you what we do each day, and also to emphasize the importance of sticking to your trade plan. Now, we were looking at the pound yen and we identified that we were bearish, and we broke and closed below the previous day's low here. So we were going to wait for a pullback up into structure before looking for an opportunity to get short on this pair. So when we drop down to the 240, so we dropped down to the 4-hour chart and we were waiting for a pullback up into this area here at previous structure support. And you can see markets started to push up. So when we drop down to the hourly, you can see that price action was pushing up to this previous support level here, which should now become resistance. We broke and closed below the previous support level. Price action pushes up and support should now become resistance. So we started to build up a kill zone. We tried to narrow down the best possible area for entry into a short. Now, we started by bringing on our Fibonacci retracement tool, and you can see we got a 618 there lining up perfectly with previous structure support. So we got a 618. We then brought on Fibonacci extension tool, and you can see that we got a 1414, which is a minor Fibonacci ratio, but you can see that we got confluence up there with the 127 extension. Now, one other thing that we use in the live room is a Fibonacci inversion measurement, which would be from the most recent swing low to the previous swing high, and you can see that we got a 1618 up there as well, all within 2 or 3 pips of each other. We've got Fibonacci confluence, we've got previous structure looking left. We also identified that we had a harmonic move, perfect ABCD pattern up there. So all we were looking at in this area for is a reason to get short, and we know that the RSI was overbought. We identified that the RSI was overbought, and all I would need on this pair is either a double top on a lower time frame or a lower low, lower close candle. Stops would have to go I use ATR based stops on trend continuation trades. So they'd have to go at an ATR above this high, which would put me at 169.55, which would be here. Looking to take targets at a previous structure low. Now that you can see that that's a good risk reward there. All I needed was either a retest of structure or a break and lower low, lower close candle. Now in my trade plan I can drop down to the 15-minute time frame. Okay, so as we drop down to the 15-minute time frame, you can see that market pushes up, we don't actually get a retest, and we don't get a break and close below candle. We don't get a lower low, lower close until this candle here. Now if I was to enter next bar market here, because my stops are up here at 169.55, well, you can see that that's well over 100 pips, and well, I have a rule in my plan that says that I can't risk more than 100 pips on any one trade. So I was unable to get involved here, but the most important thing is we stuck to the plan, and you can see that, you know, market rolled over. We would have got around 200 pips out of this move, but it's far more important to recognize that we stuck to our plan, because if you deviate from your trading plan, then at what point aren't you going to deviate from your trading plan? There's no way to control consistency. And if you see this setup and you realize that this sort of thing happens and is common in the market, then by all means go and backtest it. Backtest these ratios and this setup, or make some rules for this as a strategy and go and backtest it for the last 5 years. If you find it to be profitable, then trade it. But until then, you're just breaking your rules. If you was to just get involved in this area because it felt good, then that's just gambling. So I just wanted to share with you the importance, or you get a lot of videos on here about winning trades and look how great we are. Well, this is one that we did our analysis correctly on, so we pat ourselves on the back, but we also pat ourselves on the back for not breaking our rules and getting involved for the sake of it. So just wanted to share that with you because there's not much information like that out there, and I think it's very valuable to understand how a professional trader deals with this situation. So thanks for watching, and stick around on the channel and check out some of the other videos.